Welcome to this Trading Central video covering North American, European and Asian markets. Let's start with North America. Wednesday, the US Commerce Department announced a GDP increase at a 4.2% annualized rate in its second estimate of the GDP growth for the April-June quarter. This was the largest growth rate since the third quarter of 2014. On the flip side, pending home sales declined for the seventh straight month, giving a signal that the US market has been cooling off. President Donald Trump mentioned talks with Canada to renegotiate the North American Free Trade Agreement are going well, and talk will resume this week. Gary, head of North American research, could you please let us know how these news are affecting North American markets?
Thank you, Remy. Right now, we're looking at the Dow Jones Index, and we see a nice breakout of a broadening top formation pattern, which is a quite rare pattern we see in the markets. We had this nice short-term bullish trend in place since July. It lasted exactly a month, and we have not retraced below it. So we're using a Fibonacci extension. We see we've tested the 38% retracement of this trend, and we did not break below it, which is quite interesting to see. We bounced off that 50-day moving average in the Dow, and the Dow has been a laggard for quite some months. So it's been lagging behind the Nasdaq and S&P market. So this normally happens during earnings season. Earnings season has just passed us since July, and it's usually we can see these kind of patterns as increased volatility that's showing indecision in the market, and some positive and negative news with earnings reports. We finally cleared it. Market likes what they've seen and heard, and we are now pushing to test those record highs at 26,615 in that area with the Dow. But the real story here has been the Nasdaq. Let me pop that up on the screen for you right now. We see a beautiful bullish trend in place since April, and most recently we've broken above the symmetrical triangle pattern with the gap to confirm it, which is even more convincing. So we've drawn this little rectangle area as we may test this as support in the near term, but for now it's the leader. It's returning about 18% this year, double the S&P, just about double, and we see increased momentum. We're above those Bollinger Bands right now, so it is, something to be a little bit cautious about. Maybe we're due for a pullback, but we have this nice prior trend extension in the Fibonacci to 61.8%, which is our main target, which also corresponds to trend line resistance above us, and the RSI is just breaking out now from a similar symmetrical triangle. So full steam ahead on the Nasdaq. It's the leader. It's the market we like. We like the same sectors inside, all this software and services and technologies coming back into play, and we just continue to see further upside across all U.S. markets at this time. Remy.
Thank you, Gary. So we understand you are bullish on North American markets, but the situation looks quite different in Europe. Especially, you mentioned the impact of sectors in the US, but here in Europe we have quite different situation, with the banking sector down more than 15% since the beginning of the year, the worst performing sector in Europe. Nicolas, as head of European research, how is this affecting European indices?
Well, yeah, really, it has clearly a negative effect on the European equity markets, and especially on the FTSE MIB index, the Italian index. That's why today we would like to draw your attention to this index. Let's start with the medium-term view. This is a weekly chart you can see now on my screen, and that's pretty interesting because the price index escaped, as you can see here, from a classic broadening top pattern. And the downside breakout of this pattern last month was clearly a negative event for this index. We can also see that the 20 and 50 week moving averages has validated a bearish course, as you can see here. Last time it happened was in 2015, and as you can see, it has triggered a huge bearish acceleration. So be careful. That's clearly a negative event on a medium-term basis. Let's zoom in a little bit. Let's zoom in on the daily charts. We are also bearish on the daily charts. Why? Because as you can see here, the price index remains capped by a key declining trend line drawn from the top hit in April 2018. And furthermore, the validation of the symmetrical triangle pattern, as you can see here, has triggered a bearish acceleration. And now we are in a measured down move pattern, and we could expect further decline on a short-term basis towards the measured on move target set at 19,030 mark. As you can see here, this is the red line. The downside prevails as long as prices remains below the gap open on the 9th of August, as you can see here, around 21,600. This is clearly the key resistance area, the key threshold to watch out closely in the coming days and coming weeks. As long as prices remain below this technical element, the bias will remain bearish on the FTSE MIB index. To sum up, for Europe, we are bearish on the Italian index. As long as prices remain below the blue line, 21,600, we expect further decline to test 19,747, and in extension, the downward measured move target at 19,030 mark. That's it for Europe, Remy.
Thank you, Nicolas. So the downside risk remains high in Europe, especially on the Italian market, as we understand. So now let's have a look at Asia, where some markets are sharing the US bullish sentiment, while some are not so lucky to join the party. Being Vice Head of Asian Research, what do you see being worth being mentioned for Asia?
Yeah, thank you, Remy. Many of the Asian markets are joining the bullish party thrown by the US market, the US. And now we can see that on my screen, you can see the Japan's Nikkei 225. It keeps challenging the overhead resistance as 23,050, and now it is striking also at the upper Bollinger Band. And in fact, the recent weakening of the Japanese yen is helping stocks, particularly those exporter stocks. In fact, the US dollar against the Japanese yen is back above the 111 level and stabilized over there. And at the same time, we can see that over this overhead resistance of 23,050, the Nikkei could move ahead to 24,100, which was last seen in January of this year. And also, we can see another party goer is the Australian market. This is ASX 200. We can see that the index has been in a bullish channel for over 2 months. Okay, in fact, in this market, the healthcare, IT, and financial sectors are all particularly in demand. And recently, we have a new Australian Prime Minister elected, and with the political uncertainty eliminated, it will certainly help stocks. On this chart, we can see that the next target will be 6,415, and above that, 6,500 will be in sight. However, on the other hand, we know that some other markets are not so lucky to join the party. Yes, you are right. I'm talking about China and Hong Kong. Well, this is Shanghai Composite Index. The index has been in under a downtrend for over 5 months now. In fact, from the high seen in January to the bottom, to the low seen earlier this month, the index has slumped over 26%. Hey, ladies and gentlemen, 26% slump, and it will put up a great effort to make it back. And at the same time, we can see that the Hong Kong market also sharing this bearish sentiment in China. And it is on a technical rebound at the moment, but without breaking above the key resistance, we expect it also to pull back to its previous low. Back to you, Remy.
Thank you, Ming. So we understand that the outlook in Asia is quite mixed. Thank you for watching this video. If you want more update on the asset covered by Trading Central, please contact your broker.